Good day, fellow investors. My name is Sven Karlin, and today I'm going to discuss about NovaGold Resources. NovaGold Resources is a mine developer, a gold mine developer, and it's extremely leveraged to gold prices. This means if gold prices shoot up, NovaGold Resources stock price is expected to also shoot up 10-20 times. However, if gold prices don't shoot up, NovaGold Resources stock price can end up worthless. I'm going to discuss what is nice about NovaGold, what are the risks, what are the possibilities for the long-term investor and for the trader. So stay tuned. NovaGold Resources has two main projects. One is the Galore Creek copper, gold and silver project, and the other is its flagship project, the Donlin project in Alaska. I'm going to start with the Donlin project, give a short summary of the Galore Creek project, calculate the net present values, show what it will be worth to develop such a mine and what will be the costs and what is all the future for NovaGold, what it represents for the current shareholder at current stock prices. So let's start with the Donlin Gold project. Both projects are owned 50% by NovaGold. The Donlin project is owned by, the other 50% is owned by Barrick Gold, and the Galore project is owned 50% by Teck Resources. So two extremely big miners with whom NovaGold cooperates. That's very important. But on the other hand, it also shows that those assets need someone to develop them. NovaGold cannot develop them on its own because it's a small company. So there are benefits, but there are also cons of having such joint ventures. The Donlin project. It's situated in Alaska. It's close to the end of the permitting phase, and then it takes another 4 years it should take to build it, and then the life of mine is 27 years with the initial production of 1.5 million gold ounces and then going down to 1.1 million gold ounces. There is still potential for new exploration, new targets, but with a total reserve of 40 million ounces, you don't have to spend money on researching new reserves. First take out the 40 million ounces you have of gold and then you look around for new reserves and new gold. So, but if you look even beyond the 27 years, then there is plenty more gold probably around Donlin. So 40 million ounces, the grade is extremely high at 2.24 grams per ton, which is one of the highest grades for a projected production mine. So Donlin is really a great bet if you want to secure gold production, gold in the gold reserves for a very, very long term. However, there are some problems. It takes about $6 billion to build the mine. So upfront. And then at current gold prices, the net present value with a 5% discount rate is close to zero. So the only option for NovaGold is for gold prices to increase and increase significantly. Can that happen? Well, if you just look in the last 10 years, gold prices have doubled, and in the last 20 years, gold prices have quadrupled. So it is highly possible, especially with the printing that the central banks are doing, that we see gold prices double in the next 10 years. Then NovaGold Resources becomes a really, really interesting investment. Of course, its stock price will follow gold prices, will track gold prices, that's logical. The net present value of the Donlin project is about 10 billion if gold prices double from current values, with a 5% discount rate. So without gold doubling, NovaGold is practically doomed. The Galore Creek project. As I said, it's a copper, then gold, then silver project. but it has the same issues as the Donlin project. It takes about 6 million to build the mine, and then the net present value at current gold prices of 2.65 per pound is close to zero. In order to have a significant net present value at 7% discount rate of 2 billion, copper prices have to go to $4. It is extremely possible that copper prices go to $4 in the next decade, so there is some value in this project, some potential value. However, at current copper prices, again, the value is zero. So if we have a miner that has two projects with net present values of zero, why is the market capitalization 1.3 billion and the stock price at $4? Well, because NovaGold Resources is a call option on gold prices. The company has 98 million in cash and projected yearly expenses of 23 million. This means that the company can easily survive 4 years and do nothing. So NovaGold is currently a call option on gold with an expiration date, at least the minimum is 4 years. In 4 years a lot can happen. So if you can invest in something at a cheap price that can shoot up 10-20 times, then it is a great investment. Even if you can lose everything, when you know, okay, I can lose 1 but gain 20, it's a great asymmetric risk-reward situation. However, let's imagine gold prices double. Let's imagine copper prices go to 4. The total net present value of NovaGold would be 12 billion for the projects, split it up in 50% because NovaGold owns only 50%, so that's 6 billion, and the current market capitalization is 1.3 billion. So I can lose 1, but even if all of that happens, I can make net present values will always be at a discount because you have to develop the projects. It takes a long time, a lot of money, volatile commodity prices, so everything can happen. 1.3 billion for a net present value of 6 billion if gold and copper prices go up is a bit too expensive. I would like to invest in NovaGold if its stock price would be around $2 and the market capitalization at 0.5 billion, 0.6, because then I know, okay, a bigger company can snap it for $1 billion, that's a 50% upside, and bigger companies really like these kind of projects because it gives them a long-term opportunity to increase their resources and keep cash flows constant. So it is a very interesting project. However, for me as a margin of safety and value investors, I would like to buy it cheaper. However, if you just want a good long-term gold hedge for your portfolio, NovaGold Resources should be definitely an option. It's significant that Seth Klarman's value investing Baupost Group owns 3% of NovaGold. So they also have seen some value in the company and they like the long-term gold-copper hedge it offers. So traders, as it's a company very leveraged and it has some fundamentals, it has some interesting fundamentals, you can always buy around the dips. If there are project issues, there will always be project issues. If gold prices drop, you can buy it because the long term is what gives the value to NovaGold. So short-term fluctuations cannot impact it. It doesn't have revenues, it doesn't have debt, it doesn't have cash flows. So the long-term picture, keep it in mind, but the market has always the short term. So traders can also make good trades if they buy NovaGold low and sell it high. Or if NovaGold rises, they can short it because there will always be, as I said, trouble in developing such huge projects, financing, developing, building, whatever. Hope you enjoyed the video. There will be plenty more of stock analysis, so please subscribe. Any questions, comments, ideas, please share them below in the comments. Thank you for watching.